I'm all right. I'm all right. How are you?
Good. I can't think of a better crazy event to happen this past week to be kind of the first one to get us on the phone and chatting. This whole GameStop short squeeze been crazy.
It's been crazy. Never seen anything like this. Never seen anything like this. So why don't we, David? Why don't you make a summary of what happened for whoever is listening? So if they're not aware of what's going on, they can catch up, and then we can explain our thoughts about it.
Wow, you're putting the student on the spot to explain. All right, I'll give it a shot. Basically, what happened was all these people on Reddit basically grouped together to all buy one stock, well, multiple stocks, but there was one main stock, which was GameStop. Game, GameStop. Anyways, and the short interest was about 130%, which will be a good question for you in a little bit of how you can even have short interest of 130%. Well, what basically happened was if you're short a stock, you're saying that you're hoping it goes down. But if the stock starts going up, you eventually at some point have to cover. So you think about if you buy a stock, worst case scenario, it goes to zero. So you sort of have a limited amount of risk. But when you short a stock, worst case scenario is unlimited risk. The stock could go up forever, which is kind of what's happening in this case. So GameStop went from, I don't know, 5 to 3 or 400 last week. And the hedge funds, people that were short, could have had, out of money calls to protect them or something. But it seems like in this case they didn't. And so they're forced to really buy back the stock at any price. And what has happened is it's kind of expanded beyond just GameStop to other companies like BlackBerry, Bed Bath and Beyond, and Nokia. Really, anything that has a high short interest has sort of been targeted in the past week. Now, what's even interesting beyond that is that a lot of these hedge funds run a short-long portfolio. So a portion of it's short, a portion of it's long. And when this trade was happening, they ended up having to liquidate some of their long positions, so selling off stuff like Facebook or Amazon, Google, in order to basically cover on their shorts. So if you looked at the market the last like Thursday, Friday, it had gone down and the VIX has spiked. Super interesting.
Well, it's a crazy, crazy ride. So there are many themes here that we can talk about. It is democratization of finance. The little guy going taking down Goliath. Um,
Yeah.
so is there any who is behind the Reddit uh, board that is pushing these coordinated attacks? Do we know that?
Well, kind of, yeah. So the username that he originally put this guy posted something over a year ago, and his username is deep fucking value, and he actually had a pretty good thesis. I mean, this wasn't like this is probably like in his wildest dream the best thing that could have ever happened. But he was basically coming at it from a value perspective of saying like, look, GameStop shouldn't be down as bad as it is. He quoted, I don't know if it's true, that 90% of the stores are actually cash flow positive, and you actually have a cash flow positive business. And then he kind of called out the short interest just being too high, and that it was possible to get some sort of short squeeze. Then what happened? Maybe 5 or 6 months ago, the founder of Chewy.com, an online e-commerce business, ended up buying a bunch of GameStop stock as well. And so this kind of pushed the stock up a little bit because this guy has been successful with Chewy. He sold the company for like $3 billion. So people thought maybe he could help turn around GameStop. And then in November, what happened was the guy from The Big Short also ended up buying into GameStop as well as a value play. Now, what's interesting about those two guys is that they bought big chunks of the company, basically taking shares of float off the table, which put more pressure on the shorts eventually. Then I think what kind of happened with these Reddit things is it's been happening all the time. I mean, it was Tesla for a while, and people weren't upset about it because no one was getting hurt really. But they just kind of have a mentality of chasing momentum, and so GameStop started going up, and they all kind of got behind it, and that's where the momentum led to.
So I think the interesting part is of all these stories, why people are doing this. Are they doing this because they want to go after the hedge fund, or are they doing this because they think that GameStop is worth $400 a share? Because that really is going to affect how we think about the ban. Right? So they go ahead.
I think everyone has a different reason on why they're doing it. Like I'm sure there's some people that are totally uneducated and just see like, oh, this thing's going up, I want to buy in. I've got friends that will compare prices of stocks and think, oh, well, why is this one 300 and this one's 50? This one shouldn't be worth as much as that one, but they don't understand the concept of like a market cap or anything. So, there's definitely a miss of education as far as understanding the market. You said something a minute ago about like democratizing finance, and I totally think that's what's happening. Like one thing I've been thinking about is like CNBC is the most popular kind of finance news network, at least in the U.S. But they don't have that many views compared to some of these people on YouTube now. Like if their average audience on a day is 100 to 200,000 people, there's people on YouTube with over 1 million subscribers now. So the power is definitely shifting away from mainstream financial news to anybody who wants a voice.
Yes, that is correct, but I mean, you have to keep in mind who is listening, right? So if you have 1 million people that have a net worth of $100,000 each, and on the other hand, you have 1,000 people with a net worth of $1 billion each, at the end of the day, what matters is how much money there is behind. You can't just track people. But I think it's interesting that the financial world is definitely changing. Like all these apps that came about, they came about exactly for that reason, right? To give everybody a venue to be able to invest, even if they didn't have a lot of money to invest to begin with. Like there are all these, Acorn and all these kind of little websites that have a very good social sort of welfare outcome. They allow market participation, and we know that for the past 30, 40 years, the productivity of capital has been a lot higher than the productivity of the productivity of financial capital has been a lot higher than the productivity of human capital. So if you're not investing in the market, you're sort of kind of screwed, or you're always going to be behind trying to catch up. So all these things are good, but on the other hand, if you think about what you just said before, there is a lot of people that got into GameStop not because they understood anything or because they were sort of trying to go after the hedge fund, but they were just, it's like, okay, this is the early days of Bitcoin. Bitcoin is going up. I have no idea what the hell's going on. I'm going to buy some. Right? And then eventually there's a lot of volatility. Now Bitcoin made a very big comeback this year, but it wasn't very obvious that it was going to happen. And it's not even really obvious even right now why Bitcoin is worth $34,000. So in the case of GameStop, I mean, is GameStop worth $400 a share?
I don't know. I mean, that's up to anyone to decide, right?
No, but that's not completely true, right? Because So even if each shop right now has a positive cash flow, the market is pricing in several years out. I mean, that line of business, it's going to be taken over by online, right? Why would you walk down a store to pick up a DVD or a laser, whatever they're called these days, that you
Yeah.
stick into a machine to play a game? It makes no sense.
Yeah, well, you might be true. That might be true. But what frustrated me last week was what Robinhood did on Thursday, which is basically not allowing users of the app to buy GameStop or some of these other heavily shorted stocks. So, and they kind of came about it in a way of like trying to protect their traders or their users. And a lot of them are retail or uneducated. And I just didn't feel like maybe it might be true. Like everyone that is investing might lose their money, and that's fine. But I don't think they can change the rules in the middle of the game because there's other people that were investing into these stocks just because of the momentum. Um, and if you say, well, we're not going to let people buy in because GameStop's definitely not worth $300 or $400, but how do you make that call all the time? Like, how do you say like Tesla is worth, 800 billion dollars, worth more than all other car manufacturers combined? Like, to me, that seems like I I don't know. Maybe it's possible. Like, I guess I can at least envision a future where that's possible. But GameStop, who knows? Like, what if they end up doing a secondary offering tonight or tomorrow morning, raise a few $1 billion in cash, and it totally changes the trajectory of the business? Like, just because it's unlikely doesn't mean it's not possible.
No, I mean that is certainly possible. You just think about where Netflix was 10, 15 years ago, right? They were almost bankrupt, and then they sort of managed to somehow pivot into completely online, and now it's a giant. So, I mean, it's possible for GameStop as well. I think like this is the intriguing part of this entire story. When should you regulate market, and who should regulate market? So I think we are. It happens very frequently, or not very frequently, but frequently enough that shorts are banned. Right? It happened not very long ago that you couldn't short stocks during the financial crisis. So if you can ban shorts, why not ban long? Like in principle, there is no difference. You just somebody decides that it's for the greater good, so to speak, that we stop. But in this particular case, do we know who owns Robinhood?
I mean, Robinhood is a private startup that has several investors, right? But there's this whole backstory that one of the hedge funds has like 200 million invested into Robinhood, and it's also another one of them is buying all the order flow. So it's like Robinhood's main customer that was really short all the GameStop. So that's why it's like super sketchy, and everyone feels like there's something going on here that basically Robinhood allowed their investor and their customer to get out of some of the shorts.
So that is the real question. See, because Robinhood is a private company, and it's a financial service disruptor. I don't know. I don't know what you want to call them, how they sort of market themselves. But you know that when they went out to raise money, they must have gone to other finance firms, right? That are trying to diversify, same way as all the banks, and were sort of taking small chunks of Ripple, for example, because they thought that Ripple was going to be the next interbank money system. Looks like that's not going to happen right now, but that's okay. And the same way as Visa was, and sort of Mastercards were, which supposedly were being disrupted by blockchain technology are in fact the two largest investors in blockchain technology. So in the case of Robinhood, you don't know who they are, but you know that whoever bought shares or of the equity, those must be in the financial service. So that is the real question, right? So now all of a sudden, now obvious that this is done for the greater good. Maybe there is something more nefarious about it,
Mm-hmm.
which I'm actually surprised that there hasn't been any litigation started yet.
There's a class action lawsuit already. I submitted something to the Texas Secretary of State the other day. I didn't never bought any GameStop or anything. I was just upset about the whole like rule change and everything. Like I don't know. I think it's BS.
It certainly
So
is, right? So you, like, I think to some extent, you want to make sure the markets are regulated so that nobody can corner the market. So that is sort of has always been a rule in place. You do not want to give the ability to any one person to corner the market. In this particular case, I mean, somebody could claim, okay, well, it doesn't have to be one, as long as it is a coordinated effort, it is all the same, right? Effectively, those guys are kind of cornering the market. The thing that worries me about is that, this is not Soros squeezing the Bank of England, where he knows this happened. You might have not even been born at the time. Okay? I don't know if you remember, but it's one of these very famous squeezes where Soros was shorting pounds and forcing the Bank of England to buy back pounds with dollars, and eventually they ran out of dollars reserve. They had to devaluate, and Soros made a lot of money. But
mm-hmm.
that's a clear play, right? You're squeezing somebody when they have to give up, and then you make all the money. In the case of GameStop, this is what I'm worried about. That this is a coordinated effort. You're buying. You're squeezing out whoever is shorting on the other side, but the moment those guys go away, it's not that the price is going to keep going up,
Mm-hmm.
right? So you need other suckers to come and buy the stock so that you can sell it. So it's really a Ponzi scheme. It's not a sort of Soros squeeze. You're not really sort of targeting one individual. So that's a little concerning, because eventually it is true that by blocking people from buying, you are somehow you're taking away people's liberties, but on the other hand, you're really taking away the next round of the Ponzi scheme, right? So you're protecting those people. And to me, that seems a little bit more reasonable.
It's going to be super interesting to see how it ends, like what the exit plan is and how long it goes on for. Like, I don't know if it ends this week or it goes on, but at some point it'll probably end.
I noticed that.
Go ahead.
I noticed last week the price was about $400, and then it dropped in 2 days to about 100 and something, and then it bounced back again.
Yeah, that's because they stopped the Robinhood people from buying.
So that's a drop. Why did it go up?
Friday they allowed you to buy a little bit, like a couple shares here or there, and maybe like one or two options contracts. But what people were doing is they'd buy like their one option contract and then immediately execute it so they could buy the 100 shares. Like these people are smarter than you think. And the one thing I want to call out that's a little bit different about like it was roasted and like cornering the market, like this was all out in the open. Like it's not like this was happening behind closed doors. Like anybody with a computer and the internet could like get on Reddit and read what was happening. And they've been talking about this for months and weeks. So you know, I feel like if people were out doing their own research, like this is something they need to also be looking at. Like hedge funds have huge budgets, they pay for social data. This should have been something that they spotted. They probably just didn't believe it was possible.
No, I mean, I know for a fact that this stuff is getting tracked. That's not an issue. So smart money is tracking all these things. The issue is whether I mean I suppose the smart money saw all of this stuff, and that's why the open interest is so high. So the short interest is so high because people are effectively shorting, thinking, okay, this makes no sense whatsoever. I mean, I suppose at some point there will be a price correction, and some of the shorters will come out ahead, I guess. Do you
Maybe
know what the short interest is today? Or
it's still, I
as
think
of
it's still over 100. Because what's happening is people that were in the short got out, and then more people are coming on top of them and reshorting. So yeah, it's still going. But I want to look forward to this week because the Redditors are now pointing their target to something else. Do you know what it is?
No?
No. So they're pointing their target at silver.
Wait, a what?
It's at the commodity silver.
Ooh, okay.
And they're saying that it's a highly manipulated market and that you can't like halt trading on a commodity like they were doing on GameStop, and that if all of them decide to call in that they want their physical silver, that that everybody that's holding contracts against them will basically be squeezed and have to deliver. And if you remember what happened with oil going negative this past year, they say that it's got potential to drive an ounce of silver up to $1,000.
So people are so can you trade silver futures on Robinhood?
You can't do futures on Robinhood with anything, but there's there's an ETF, SLV, or SLV, and there's a couple other physical silver ETFs as well, but SLV is the one to watch. Now, what's super interesting is there's a couple main websites that you can buy physical silver from. And I don't know if you remember my kind of weird obsession with silver, but I actually have a few hundred ounces of silver coins and stuff. So I almost bought some more this weekend just because I wanted to like be part of this or whatever. But then I thought about it and was like, I have enough. I don't need to buy more. And I actually have options, like I have leaps that I bought a while ago just because I'm nervous. I've been nervous forever about inflation in a weird way, even though it's never happened. I don't know why. So I actually have some contracts that expire next year. So I'm super excited about this. But what's happened is these two main websites where you buy silver from, they're not working at this point. They've basically sold out. Like all these Redditors bought all the physical out. And if you look at the future price tonight, we're already up about 4%. Earlier when I was looking at this, we were up 8%. And the thing is like, and these Redditors, retail people, like they can't trade futures. So other people are involved in this. So I think it's super interesting to see what will happen. And silver right now is trading about $28. But the first time I ever got interested in silver was like, I think 2011, when the price went from around 20 up to 50. And so I look at this as like, we can easily get to 50 this week. and we'll kind of see where it goes from there.
Wow. Wow.
Yeah, super
Crazy.
interesting.
Crazy.
So that's what I'm watching. I might buy some contracts in the morning. We'll see. Uh, and then the other thing I wanted to say is I've been watching a bunch of these people on YouTube that have, hundreds of thousands of followers, and they're all like super mad about what Robinhood did, and they're kind of going more towards crypto. I mean, they're already big on crypto, but their point is like this doesn't happen with crypto. Like, there's no one to shut it down, no one to stop trading. There's no one, no central body controlling it all. And I sent you that link last night. I think about like it was a documentary on Bitcoin. That wasn't in there, but the thing that kind of has moved me and convinced me more of Bitcoin and like the future is just how big it is for young people. Like, for instance, my parents, and I don't think anybody their age owns any Bitcoin. Then, like, people your age and other people like that, probably a couple people. Like, do you know other people that own Bitcoin?
I know a few people, a few colleagues in the profession that sort of bought some coins at some point. I don't know if they sold them.
But what
Uh,
about like people out of the profession?
no, I don't know anybody who.
Okay,
Uh, yeah, maybe one guy.
okay. And then like in my age group, I say maybe 10%, 15% of people, even people that aren't into finance, own some crypto or talk about it. And then as you go younger into like even like people in their 20s and their teens, like 20 to 30% of them own some crypto. And so I started to think like it's just a matter of time before kind of the majority flips. Like at some point, the older people are going to sadly die off and it won't really matter. And the younger generation, like this is money to them. Like they're not second guessing it. They're not thinking like is Bitcoin money or not. They just think it is because that's how they grew up. It was already there. So super long term case, but I think it's around for forever.
I mean, I think like to some extent, some of these crypto projects, I can see them surviving for a long time. Like, most of the applications run on Ethereum, so I can see why Ether would have, a high price, or why the price might go up, because somehow you need, uh, it's the base of whatever runs on top. And now there is a lot of stuff that runs on top. Some of the stuff makes absolutely no sense. Like Dogecoin was up 400% last week.
Yeah, but it's like a cent, so whatever.
No, 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 no. He went from 1 cent to whatever, 5, 6 cents.
Yeah,
But
but it's that's
yeah, but this
everyone
one
knows.
doesn't mean anything. Like it's still like, I don't know, $100 billion of money.
Yeah, yeah. But the thing is like anybody that believes in it or gives it value is like all it takes. Like there doesn't need to be a central government or anything saying it's got value. Like you just get enough people believing, and it has a life of its own.
I mean, that is sort of the same argument that people have made about commodity or precious metals for a long time, right? There isn't any particular reason why gold uh, is worth what it is worth. The industrial use of gold is very little. There is no more pegging of currencies towards gold reserves. So why is gold worth whatever it's worth, or silver, since we were talking about it? Uh, like there is no particular reason, right? But at the same time, I mean, I don't know, right? So that I guess the that's why we think about the financial markets as a place where you both need long-term investors, and you need arbitrageurs that come in and try to arbitrage prices away. So you need people to short. Right? So to some extent, I thought that as much as I like this type of ventures, let's take down the big dog type of thing. I thought that the argument about, oh, well, hedge funds have been making so much money all these years shorting, so now we're going to go after them. I thought that was very naive, because to some extent you want hedge funds to be around because they provide a service, and the service that they provide is to sort of keep the entire system in check. Right? So that individual investors don't end up like in the Great Depression in the 30s, where so the banks were giving individuals loans to buy stocks that were worth nothing, and then eventually the entire castle tumbled down, and all of a sudden you got like millions and millions of people in the street with nothing to eat. So you need forces, you need counterbalancing forces in the markets. So you want hedge funds. There's no question about it. Now, I think like the most intriguing question in this particular case is what I was thinking about is that there is a very simple solution to all of this. You allow everybody to invest in hedge funds, not just a particular class of investors. You allow everybody to participate both in the long and the short, and then you sort of solve the problem. And if people are willing to take volatility the same way as they're taking volatility in cryptos, then I mean it's fine. It seems like people are fine taking 100% volatility in Bitcoin. So then let them take 100% volatility in hedge funds strategy.
Well, it'll certainly be interesting to see if there's any sort of announcement or regulation or anything that comes out this week. It's going to be a fun week, I think.
It's going to be a fun week. What about, do we still have time? How are we doing on time?
I think we're about 30 minutes in, so I'm fine. It's up to you.
I thought we decided to put a hard stop at 30 minutes.
But yeah, I mean, I think we don't want to bore people, but if you had anything else you want to talk about quickly, otherwise we can wrap it
up. I think we're going to wrap it up with a thought for the next time we speak. I don't know if you read about the fact that a dear friend, Mark Cuban, was hedging his portfolio because he thinks that there's going to be a reckoning in the market where I guess there's going to be a correction at some point. And maybe we need to talk about sort of corrections and hedging strategies next time, since the world.
Well, I did have some VIX calls last week too.
There you go.
So, I mean, I don't. We'll see what happens, but like, I feel like the market has been on a tear for the past year, and corrections happen like 10-50% all the time. I think it's healthy. It gives people to rebalance a little bit, but it's hard. You can't ever time these things. It's hard. But I like to have protection here and there. So I think about five or six VIX contracts mid last week, and so far it's working out just because of the volatility between all the shorts and selling off the strong positions. But I think the other thing I've heard is that February is one of the worst months for the market. People look at it from a seasonal perspective. So we'll find out. Well, I actually want to talk to you about this. We can do it in a different. But just like efficient market theory, like we learn about it, and I see all these things happening, and I don't believe it anymore. Like I don't think the market's efficient.
I mean, so you see, market efficiency doesn't mean only one thing, right? So it's sort of the convolution of two different, the two different pieces, so to speak. On one end, you sort of you know, prices should reflect information as it arrives to the market, and I think most people are fine with that, right? So the real question is whether you can predict what the market is going. It's not a matter that the market is moving, because if there is a lot of information coming of whatever nature, then it's perfectly fine that the market moves. The question is can you predict what's ahead? And I think that predicting ahead, it's incredibly hard. Like I suppose that if you were, you know, the very early sort of Reddit followers of the GameStop, you probably made quite some cash. But if you're jumping in now,
Yeah.
I don't know.
Yeah.
Let's
Well, the
see.
thing that I've always thought about efficient market, whatever thesis or theory, and so like a lot of times I see a trend happening. Like I saw the Reddit or the GameStop thing happening 2 weeks ago, when it from like single digits to double digits, and in my mind the trade was over. Like it already happened because I felt like, well, if I know about this, everybody knows about this. Well, apparently not, because it just
Yeah.
kept going and going and going. And it seems like that's happening more and more. But
But you see, but you couldn't predict it, right? So that's the whole point. Like you can't predict what people are going to do. So at that point, the information that you have is the information that you have. I mean, you obviously you have to sort of weigh in your own opinion about it. But like you know, if we were to say now it's Sunday night, it's about 9, it's almost 10 p.m. on the East Coast. What is GameStop going to be going this week? I mean, I don't know. My sense is that it should go down, but go figure.
yeah, I don't know. I pulled up Yahoo Finance real quick. The overall market futures are down just a little bit. They were down a few hundred points about 2 hours ago. And right here, one of the first stories is silver prices miners surge as retail buyers pile in. So here we go.
There we go.
Let's
Guess
wrap it
me.
up, and we'll have another call if a couple of things happen. One, if GameStop collapses. Two, if silver soars. Or three, if the market corrects.
All right. All right. Looking forward to it.